Hi and welcome to the Market Alert for Thursday, the 8th of July 2021. So yesterday it was all about the FOMC. They had the preview out earlier and saying that it was going to be about the tapering. It says ideally the minutes could give us some more details around the tapering debate, a timeline, the pace of tapering, i.e. US dollars 10 billion per month instead of the 120 billion that they're actually printing at the moment. Whether to reduce the mortgage-backed security purchases first, given the booming house market as well. So eventually the news came out. FOMC minutes show Fed ready to taper earlier than anticipated. This didn't really affect the market that much, actually. Expected the conditions from the beginning to reduce the pace of asset purchases to be met somewhat earlier than they had anticipated. We'll wait and see how well that goes. Yellen was also out yesterday, thinks a little inflation is a good thing, but isn't going to affect her. She's worth millions. Not about whether those that are on fixed incomes can afford to see inflation, so she doesn't give a stuff, which is the normal thing, isn't it? Government and Fed are doing everything they can do to artificially suppress interest rates and now keep them at a zero, because even the slightest increase in rates is more than the economy could bear, and the stock market as well. This is why a few weeks ago in the Market Alert I had a go about them trying to increase interest rates, get my teeth in, twice in the next 2.5 years. It's an absolute joke and utterly laughable that they can't actually do that. It takes 2.5 years to increase the interest rates by 0.5%. You can't make this crap up. You really can't. And this chap, Fed's Quayle, it seems unlikely that the US dollar status would be threatened by foreign CBDC. That's a China-backed currency, of course. The interesting thing there as well, it boosted the price of the dollar. That's all he needed to do was just open his mouth. It doesn't matter whether it's a pack of lies or not, enough to move the dollar up and the precious metals down. Meanwhile, in the implied volatility, the options premiums, or the byproduct of the option premiums, incredible, dropped yesterday from 1844 to 1286. Massive drop, threat removed as the markets were brought back to the upside. Now, what the market's waiting for is this Tuesday CPI is going to be an interesting one for the metals and also for the dollar as well. So Tuesday of next week we've got the CPI, so I'm just giving you a heads up there. So that's why there's a likelihood that the dollar's going to continue to rise and the metals markets are going to get hammered to the downside. For news today, it's Thursday, it's unemployment claims, and we've got crude oil inventories at 4 p.m. So let's get on with it. Let's have a look at the Dow. You can see yesterday moving to the upside. Market's really given up as far as the Dow is making an all-time high is concerned. The Nasdaq and the S&P yesterday made a new all-time high. But the Dow hasn't got that momentum on the upside. And what news is going to give it the momentum? That's the question for me. I can't see any reason for this market to move to the upside now, apart from manipulation. But fundamentally, there's nothing that can move the market to the upside to take out that all-time high. And even the tapering is only going to exacerbate prices to the downside, as it did in January of 2018 when they had to step back in and say that we're going to continue to buy because the market fell apart. So we'll wait and see. In the 30-minute chart, just drag this over. This was Tuesday, as the market played catch up after the Independence Day celebrations on Sunday, and into Monday, of course, the market closed. This is the picture for the Dow yesterday, also trading up and then trading down, but not as much, before reversing and coming back up 89% there, which you can see, and then trading sideways, waiting for the Fed at 7 p.m. If we have a look at the 5 minutes, we'll see when the Fed spoke, and that's going to be around here, and that's it. And that was your lot. No big reaction really, 70-point swing, again up, back to 89% retracement, and then moving back to the high that was made earlier on in the trading session there. Meanwhile, in the DAX, completely different picture. Talk about a reversal yesterday. The market coming all the way back. This is the 89 that we drew in yesterday in the chart. Actually, it isn't the 89 we drew in the chart yesterday, because we just used this one price bar, and we can see that this was exceeded. The high was also taken out from the previous day, which I'll just draw in. So it took out the high as well but it took until we got into the electronic session last night to get through that bit. The market staying around and just under the previous day's high until that point. But again, notice we're back at 89%, and that is drawn in from this high to this high. And notice how the market hasn't even breached this on the overnight. Weakness around in the German DAX overnight for sure at the moment. So if we have a look at actually one of the 30-minute chart. And again, you can see that there's a Tuesday session, the market selling off with the Dow, and then yesterday being brought back and staying up there until the FOMC. Had a bit of a wobble later on, but otherwise straight back. And well, that was reversed before the FOMC and then brought back. But overnight, at the moment, we're currently trading above the daily pivot, so that's a bullish sign, as is the 200 MA. But there's yesterday high, and you can see that the market is struggling there. That high is 89% of the daily chart, isn't it? Yep, it is. Yeah, just to clarify that. So as you step back and have a look, you can see that we've got the high there and the R1 above. And then down to the low is a good 100, 200 points to the downside there, which is not impossible to get to. We saw that on Tuesday after the Dow opened, sending the market down. So at the moment, we're around midpoint. So we'll see what happens there. Now onto the metals, like I said and alluded to at the intro. These are, well, not both. I'll start off with gold. You can see gold is sideways to lower, but nothing like what they've done with silver, particularly overnight as well. You see it's being hammered, and the manipulation of this is never going to stop until the bankers decide it's going to stop. It's allowed to move up periodically when it suits them, but at the moment this is coming back down. And the order that I had in at below here, I'm going to consider having a look at this in a bit more detail when I've finished the market alert, to put a buy in down at this low, because that's where it's going today, and if not beyond as well. They're just going to give it some hammer to shake out the week long. So we'll have a look, see where the 89s are. We've got a couple here actually. I'm just going to move that across. We've got this one here. That's a 78 actually, sorry, from that low to that high gives you that 78 there. And we've got 78 and 89. So these three areas here, 27.75, 25.61, then we get to 25.45, which is an interesting area. So that 25.45 area might not be so bad. But you'll see what they've done overnight. Move the market down. Let's go to the 30-minute chart. There you go. And this is an interesting pattern, isn't it? We've seen this for the last 2 days at 10:30 New York time, where they've just come in and hammered the price down because they can. I mean, I saw a report the other day that JP Morgan now holds 70% of the physical market of silver. And if that's the case, if it's true, if that article is true, then what chance of we've got of seeing the lid taken off the silver price any time soon? One thing's for sure, though, when they do, they are going to make not billions, but trillions out of this trade. But at the moment, they're using the tools that they have to their advantage. They're happy to pay the fines. The last one was 900 million, just under a billion, and they made 10 billion on the deal. So it's no big deal, is it? You know, even if a couple of traders have gone to prison for the manipulation of the silver price. But it's when you look at it, as I say, on a long-term basis, you know that it's so undervalued. It's just a matter of not so much a get-rich-quick scheme, but insurance against the ultimate collapse as they continue to print the debt in the US. Okay, so that's a quick roundup. I'm just going to go back to the DAX for a second, into the 2 minute, and have a look at this in a bit more detail overnight, just to see what we've got. I'm going to delete that line. So I'm just looking. I just wanted to see what the activity was like in a smaller time frame. Not a lot to report there either. So volatility quite low there. Okay, that's it for this part. In the second part, we're going to have a look at the trades for yesterday. It was a tough morning. After the market had moved higher, it then traded sideways, causing a few issues. But we'll look at that in more detail next. So let's pick up from yesterday's market alert, where I finished recording around this time. The market found support at the close and also at the psychological level as well. Notice that prices drive through the 200 MA, the 20 bar moving average down here, and prices are failing to close below the 5 bar moving average until this bar here, where we see a spike in the volume, and then we see a resumption of buying to the upside. Prices then continue on up, and this is in the futures market. We haven't even got to the main session. So prices have moved up, or the market's moved up over 60 points to this level at the DP where the market broke through. And again, you'll see at this area how prices drive through and the increase in volume. Well, this had set a precedent really for the open, and if we fast forward, you'll see the market coming back to the DP level. There's a bit of selling there, and then prices find support for a while before they break through and then bounce back. So we've got a bit of a profit taking move going on there, and that's just the futures traders getting out before the cash market opens. But then as soon as you can see there, a bit more getting out of the futures market, and then we see the market open and drive to the upside, and strongly to the upside as well. So this, again, as I say, we'd already on the long side. Once we close back above the 5 bar moving average here, the 20 bar, again, see how the momentum is to the upside. You've got the 200 MA, the 20, the 5. You've got all of these in the right order, and prices are failing to close below the 5 bar moving average. Now in the daily chart, had a look just to see where the fibs were that I'd marked up in the market alert. Have a look at the upside targets, and we were just heading for 50% there in the daily chart. That's why the market had stopped. So what I did was draw in some fibs onto the chart here as well, just to get an idea of where there may be some support or resistance. And we can see that resistance there at 89. I then drew in a line across the high as well that needed to be taken out to keep the upside intact. Prices then starting to show some hesitation, as you can see there, with prices coming off the high, but still at the moment above the 5 bar moving average. And again, you'll see the market bounce off this, came back down to the BRN and then bounced off. Again, that's not uncommon, keeping that momentum to the upside. Now stuck at 89, which was drawn from there to there, and again you've got a new morning high that you need to take out. So prices started to go a bit sideways, again coming back through that 5 bar moving average, and as it did, I was interested to see if it would pick up any new buying at the 78.89, and that's what it did. You'll see the volume increase, and also prices close back above the 5 bar moving average. Once more, prices try to break through the resistance to the left, and this time attempting to spike to the upside. You'll just see that in just a moment. There you go, you can see that now. Once again moving to the upside, and now having put on 100 points and at the 62% retracement in the daily, and now you'll see prices show some selling here. So we've got some weakness, or potential weakness, coming into the market at this level, and then prices start to move to the downside, as you'll see here in just a moment. There's more potential weakness, and then again, this is the first time the market actually closes below the 5 bar moving average in that up move that we saw from the open. However, prices then attempt to move back, again being picked up as soon as we get a close back above the 5-bar moving average. We can resume to the upside, and what I've done here is taken this high to this low and projected back just to see how the market copes with these 3 levels, see if there's any further weakness coming into the market. Prices do a double top, but then manage to drive through this, and that takes us through the 62% in the daily. Now we've got an interesting bar here because it's an increase in volumes come off the high as prices, and also starting to trade below the BRN there. But once again, prices trade sideways and then try to bring the market back again, coming off that 78.89 from this low to this high. And then eventually we end up with a potential sell signal. Now, in the alert, I made mention that we were going to have the FOMC meeting minutes released last night at 7 p.m. And once the market's made this sort of move of over 100 points, it's likely that it's going to trade sideways. And that's precisely what happened. But very, very frustrating because the market put in a sell signal, which was filled, and then reversed off this as well. So that was a 16-point loss there. And then the market attempting to move higher, but running out of steam and hitting this resistance here where the market had come back to. And again, we've got an increase in volume. So the market reluctant to move higher. And given it already moved 100 points, it's highly unlikely that it was going to continue and break through to the upside. I was hoping it was going to have a look at the previous day's high, which would have been a nice reversal in the daily chart, but it wasn't to be, because the market then came back as well. We'd already got a clue here as prices closed back. Again, see that increase in volume. And then this trade stopped out as well. And then the galling thing is that the market then decides to test it. And if you look here, you've got very high volume compared to the previous bar, but the range is narrower, so we can see them buying back the market at this point. So prices then move back, as I said, galling when this happens, and then we get another chance to move to the upside. But once again, and I'm going to fast forward through this, we get filled. We come within just there were 8.7 points. Don't quite make it to the scalp. I decide to hang on in there and see what happens, and it was a long process. The market trading at 78.89 as well, from this high to this low, and this was just tedious because the market just traded sideways. So I'm going to fast forward through this. You can see how it stayed sideways and then eventually came back, and I decided that enough was enough and pulled this one as we were getting close to the news as well. But there was something about the weakness, so then I had to reload the charts as the internet went off, so you have to reload. And then as you catch up with me here, what happened was the market came back to the 20-bar moving average. And I spoke about this in one of my other trading examples and market alerts about using the 20-bar moving average to re-enter the market. So we've already got this, the market had been sideways. It was going nowhere. We had the news coming out, likely to shake out before that. The market then goes up to the 20-bar moving average, fails to break through. We've got the R1 there. So I just tucked underneath this as a sort of a re-entry to the downside. And I will do more of these for you and show you more of these. So as the market came down, it sat on the 89% there from this low to this high projected down, and failed to break this. So I decided to get out of the trade and take the profits to mitigate some of the morning's losses off the other two trades. So you'll see the market coming back, and then I will actually take the money off the table, which you'll see in just a moment. And there's the trade there, 16 points recovered from the other two trades where the market was taking a breather. And like I say, we've got the FOMC meeting minutes, which were out last night as well, which obviously affected the afternoon session. So in the afternoon session, I'll just wind on here. There were no signals. There was one potential one which was cancelled after the market failed to fill the trade. The market just having a quick run up there to the previous day's high, which I'm looking at there through the 78%, and then the market stops there and then makes its way back down as it waits for the news, which we'll see in just a moment when this was released. There we go. We had the JOLTS job openings. They came out slightly lower than was forecast, and then a case of the market just waiting for the FOMC. And in true to form style, this was the move to the downside before the end of the 4 p.m. trading session, which is no surprise as the market waits for the FOMC. It gives them something to move the market back to the upside once the news has been released. They don't generally take it to the high. There's always a bit of a pullback first, and then prices sideways there, but moving back and going and closing back above the high by the end of yesterday's electronic market and the close of the Dow. Okay, that's it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.